Good afternoon, everybody. Eric here with you. It is Tuesday, February the 20th, and we are about 10 minutes until 1 o'clock here in the Central Time Zone. Just want to give you a midday update. I got quite a few names here that I'm tracking, and we have put on several trades this morning already, so let's just go ahead and get right to it. That way we can get caught up here on everything. So S&P still showing some signs of weakness here, not able to cross that 618 retracement level. So I think that we're kind of, like I say, we might bounce around in here in this area just for a little bit, but I think we've set the stage here. We're going to start looking for a decline, and I'm positioning as such. So just kind of drill down a little bit closer time frame here, looking at a 10-day, 15-minute chart. Notice here that we did get a sell signal. That was actually on Friday of last week. So we didn't have a confirmation with taking out the new lows or taking out a swing low. So with today, we still have our moving averages in a sell mode. They tried to peak back positive, but did not do so. And now this swing low right here has been taken out down here. So we do have a confirmed sell signal on a 15-minute chart here. We can look at the hourly just to confirm it, bigger picture, which is not confirmed yet. The moving averages are getting very close together there. And we have just kind of dribbled this whole sideways thing here. You notice we got a little bit of volume coming in here, but nothing major. Still a lot of good buying volume with all these green blocks here. But like I say, I think that that we're about to start seeing some more of these kind of volume bars coming into play here, as it looks like the market wants to start acting weak at this point. So that's kind of what we're looking at for the S&P. And some of the names that I had mentioned, I told you earlier that I was buying Qualcomm. I jumped into that trade this morning, and that trade is already up 35%. So that's not a bad return for a couple hours. I think I'll take it. So as I said there earlier, Qualcomm, we actually jumped in there this morning, pretty much right out of the gate. Bought right in this area here. Shares have spiked back higher, and there's the wife calling. Actually, no, that's my mother calling. Hey, okay. So, anyways, so shares have spiked back higher. I think that that this one, like I said, I did not expect it to necessarily bounce quite so hard. And so I bought the April 20th 70 strike calls. I paid about 85 cents for those, 86 cents, I believe. And so, like I say, now they're up 36%, so 37%. Like I said, I just did not expect it to happen quite so quickly, so I might go ahead and jump out of those before the day ends, or start looking to re-enter those again later. From a daily perspective here, Qualcomm is actually, let's pull out just a little bit longer time frame. Like I said earlier in the video, that we have had these someone's trying to buy Qualcomm's trying to buy NXP. So I mean, there's a lot of things going on, a lot of moving parts here, so it's kind of a fluid situation. But based on the numbers that Qualcomm provided us in their latest report, which they said they expect to earn $4.75 to $5 on an EPS basis for this coming year. So some quick math will show you there that trading at 63.5 bucks. And even if you take the midpoint of that and say, 4.85, you're trading at a 13 PE. So that is a very cheap multiple for a good quality company here. So huge presence in the mobile space, and so I think that continues. And like I say, I think you go ahead and you can buy this thing. I do expect it to eventually pull back down here to this 200-day moving average, especially if broader market weakness stays prevalent. We had the moving average cross here, kind of confirmed it here. We've got these lows being taken out. So like I say, the intermediate term, and by intermediate I mean the next couple weeks, is probably a bearish picture. I just think that it kind of got popped a little bit too hard, too fast this morning. So I jumped in there, like I say, and bought calls for April expiration. The other one that I mentioned to you this morning, we talked. Let's see here. We talked about Walmart. That was the other one that we jumped into. I've already entered this one. It had a report today that their online sales growth wasn't quite as robust as what analysts had hoped for. So that's causing shares to take a little bit of a dive. I do not think, though, that this report warrants and I'll pull it up here for you. I do not think that it warrants a 10%, 9% correction here or down move. So I jumped in there and I bought actually a call spread on this one I did March expiration. I bought the 96-101 call spread. So that means I bought the 96 strike calls, and I'll kind of draw this for you. I bought these calls and I sold the 101s, which are kind of back in here, against them. So I am looking for shares to rally to this point and then probably turn back lower. So that's one of those, just a little short-term play, and I use the spread to minimize my cost, because, like I say, I think it was a little bit, it was just a more favorable setup. Another one that I'm looking at, I had talked about the other day, and we had actually entered a fossil short, and I think that you can still stay with that one. We shorted on this big pop here that day, and I jumped into some put spread, and then I added some puts a little bit later on the day. Now the puts that I had just outright, I've already sold those. Those were a nice little 90-some-odd% gain, if memory serves me correct anyways, and I stayed long my put spread. So what I did with that one is I bought the 15 strike puts and I sold the 10s against them, just to kind of help lower my cost. That is up 20% at the moment, and that's going out to March expiration, so we still have a month for that one to play out. But like I say, it's already up 20%, so that's one that I'll probably let ride for a little bit. Another one that I actually put on the end of Friday was Arista Networks, and I did a call spread in this one. This was more or less a gamble. It kind of got beat up pretty hard. So what I did is I did a 290-300 call spread. That means I bought the 290s and I sold the 300s against them. So I bought these and sold these. Pretty much what I'm looking for is any kind of rally back up to that area. So I just sold the 300s against it because I know that the upside is very limited, and it helped kind of lower my break even to make it a little bit more favorable setup. So I think this is one that you can buy from a longer term perspective. You know, they're very big in the so they're pretty much infrastructure and Internet of Things and all that kind of good jazz that goes along with internet stuff. So I think that you can buy this one, like I say, as a little bit longer term play. And I'm actually putting together some work for this one that talks about the fundamental side of things. You know, it's a pretty expensive stock relative to some of these other ones and stuff, but I think at the same time you're getting growth of 30 to 40%, so it kind of warrants a higher multiple. But I would definitely use options to play that one. Pandora is another one that we had talked about, and we actually have been in and out of this thing about 100 times now. You got the buy. I told y'all to buy against 459. 460 was the actual number. So we bought down here. We had a nice little rally, and we had an intraday surge. A lot of big options being put on this day right here. So we sold out of there expecting a pullback, which is exactly what happened. We got a pullback. I told y'all probably a little bit underneath 5, and we went to 495. So that was dead on in terms of pricing, and I went ahead and bought the same calls back, the March $5 calls, for, like I say, March 16th expiration, and they have now started to rally, and just since we bought those are already back up another 32.5%. So you know, we sold them for 90% gain, we bought them back, and now we're up another 30%. So that just shows you how much you can flip these things. You know, there's not really, you're not married to the position. You don't have to hold it for any amount of time, so just go ahead and get in and get out. So that's one setup there for Pandora. And like I say, they do report earnings tomorrow, so I'll probably be taking part of this off the table. I feel like it's just prudent to go ahead and at least capitalize or cash in on some of the gains here. And then looking at this 15-minute chart, you can see that this is the intraday spike that we had talked about. We had all this volume come piling in there. Sellers kind of pushed us back down, and right underneath that 5 areas where we bought in at to rebuy in at. And now, like I say, we're seeing the volume has been fairly robust here all morning to the upside. The bar is pretty low for Pandora, and like I say, their earnings are tomorrow, so they'll have to really screw up bad in order for this to be a negatively, or negative catalyst for the stock. But I think that the fact that the bar is so low, that they have a good chance at tripping over it. So like I say, I just don't want to carry the risk into earnings, and I'm up on a nice gain right now. So I'll take my 33% and probably cut and run by the end of the day. Like I say, I'll probably leave a little bit on the table just so I stay exposed somewhat to it, because there's a good chance that they deliver a good report and shares will rock to the upside. And I think that if they do get going to the upside, one of my initial targets will be pretty much up here at the $6 level, and these are just some round numbers here that I'm using for you guys, and pretty much dollar increments up through there. I do think that you could get up to 10 in the next several months if the report looks good and the markets don't just completely implode. Another one that I put on this morning, I'm sorry, actually I put on Friday to close, was Riot. This is a Riot blockchain. This is really pretty much a limited way to play, or a way to play with limited risk against the cryptocurrencies. So what I had done was I jumped in and I bought, let me double check here to make sure that I'm not crazy. Yeah, so I bought the March 16th 15 strike calls. Pretty much what I was playing on here is some strength coming back into the cryptos. They have kind of gotten beat up here, so like I say, I'm buying the 15s right in this area right here. So I'm looking for a play off this 200-day moving average and moving back to the upside. This is one that you definitely want to have on a tight leash, and you want to have very limited risk, so definitely use options. I would not be buying this thing, because if you bought back here at 40, 35, 30 bucks a share, you got screwed pretty hard. So definitely use options if you want to play with Riot to the long side. Another one that I just put on was Snapchat. We actually had exited out of that the other day, and we had a nice little gain in it. I think it was like 60% that we had sold. We actually have made this one now twice. This is our third time playing this one. We sold it on this day because of a 40% spike because of a good earnings report. We bought puts on there, and we sold those puts right there. And then I just went ahead and bought back today. I bought back some weeklies that expired this week on Friday the 23rd. I bought the 19 strike call, so those were already in the money slightly. So those are down right now at the moment, but I think that throughout the week we'll probably get a little bounce back in those, and those will actually turn out to be pretty good. Another one here that we can kind of talk about is PG. I don't want people to get worried. I did issue a buy alert the other day, and I told you y'all could buy this one, especially for a longer term play. We got the buy right in there, and so it actually worked out perfectly. I bought the, of course, I used options, and I bought the 80 strike calls from April expiration. Those calls are now up about 5%. They were up about 30% on Friday, so they've given back quite a bit of their gains, but shares are down 1.5% almost today. I think this is just probably sector weakness in shares of PG. I don't think there's anything to worry about here. I think you can still buy against it, and I think it'll find some support here, and actually you can see it already on the hourly chart here. So let's see here, and I was going to try to get my tool there. So yeah, so we had our buy signal. You know, we're still waiting to take out the swing high, so we haven't done that. But then once we got this other signal right over here, then we did take out the high. So like I say, you can still stay with this one, and this is what triggered us to buy in the first place. But I think that, like I say, you can just kind of hang on with this thing and be looking for this to play. And we're looking for a move back up to the upside, looking at about 86 bucks is the area that we're targeting, because that was a level out going back quite some time here that we had saw had acted as support on a couple occasions, and so we expect us to play back up into that, and then we might dip back down afterwards. But right now I think you can stay with PG on the long side. Westport's another one that we had here, and I know we've got a lot of trades going on here. I'm probably about 40 open positions right now myself. Westport we had bought at 294, I think it was, or 296. So we're up a few pennies right now on Westport. Again, this was one that we wanted to play as a speculative position, so we're going to let this one ride. I'm using in the money calls. I bought July $2 calls to play this one, so those are pretty much at a break even. We're pretty much neutral right now on those call options. So I think you stay with this one, though. I think it's got a chance to move back to the upside and give us a nice little gain. UPS is another one we entered. Did this one as a long-term play. Now it's getting kind of beat this morning, or this afternoon rather, and we're actually now at all-time, or not all-time, but lows for the day. So I'm a little bit concerned with UPS, and I might actually jump ship on that one. I'm gonna wait for a better time to re-enter, because right now it's not working in my favor. And actually, we'll take a look here. Yeah, so down about 40% on UPS there. So like I say, I might have to go ahead and hop out of there and look to re-enter this one a little later. This one has not worked out as I thought it would. So we'll also have to kind of check and see. I kind of thought with all this volume down here, especially some of these big volume spikes here, that we had reached a moment of capitulation. So really, I guess the thing you need to watch for is that this low right here at about 104 does not get taken out. So if you're buying the shares and you're buying it for a long-term play, you're okay, I believe. So I just would be careful, because like I say, this is one of those, and if you kind of look back here at this longer term chart, you can kind of see how we followed this trend line for the most part, and that's what we're testing right now. So if you kind of can see it right through here, you know, depending on how you draw it, either we're below it or above it, or you know, it's just kind of depending on how you want to interpret the data. But I think just broadly speaking, the trend is still in place, and that the upside is still going to be the path of least resistance, especially in the short to intermediate term. The next one I wanted to mention real quick was, let's see here, let me find it. I'm trying to keep up with all these as I go. Oh, Deere. I jumped into Deere as a short play. That one's actually working out pretty well. I'm at about 40% right now. I just bought the 160 strike puts for March expiration. It reported a good, it reported well the other day, so it spiked higher. I think it's gotten a little bit rich in terms of valuation, so I feel like it was a good short candidate. So I went ahead and hopped in there and shorted it by buying the puts on it. And like I say, those are working out very well right now. So I wouldn't be shorting this on a flat out basis. I would definitely be doing it with options, because Deere is a great company. It's well ran. They've got a huge moat. I mean, this is kind of a company that's a staple in the industrial space and stuff, and it's very, like I say, very well ran and pays a decent dividend. So you'll have some support from the value buyers and stuff like that as the shares kind of pull back a little bit more. I think this one actually might give us a little two-step though. So we got a 1 here, and we might have one more dip lower. If this thing were to go to 135, I will go ahead and say I'll be looking to buy that thing. Especially on the pullback to that 200-day moving average, which it has not seen in quite some time. So I would be looking to buy shares of Deere on a pullback, but right now I'm actually short them. So let's see. Finally here, I will wrap up and talk about the volatility index a little bit. We have bought puts, and I would double check to see what so the 35 strike puts are what I bought. Those are of course not doing so hot with volatility moving a little bit higher today. But I'll actually be looking to add to it, because I think that we'll probably see volatility ease back in the next couple of days. But I think that towards the end of the week we might get a little bit spiked to the upside, especially if the market starts to roll back over again. So for right now, if you're short DXX or UVXY, I think you're okay. If the VIX starts to get up to say like a 25 handle or something like that, on the actual VIX itself, like right now we're at a 20, so if we start getting some sustained closes above say 20 or 25 or somewhere in that area, then we'll have a little bit of a reason to be a little bit more cautious about it. But right now I'm just going to stay long those puts. Okay, alright guys, I'm going to go ahead and wrap this thing up. I hope y'all are having a good day trading and stuff. Hope y'all are making lots of money. I'm giving you a lot of good ideas here. And this has been a very good day so far to start the week, especially having a day off this week with Washington's birthday, President's Day. It's a 4-day week for us and stuff, so you got to make up a little bit of lost ground, and I think that we've done that already today. Like I say, I'm looking at several trades here, and some of them that have been on for no more than a few hours, and some of them have been on for a couple of days or since last week, and they are all in the green, so I'm pretty happy with that. Oh, and one other one that I did put on the other day, and I'll mention it just briefly, is Wells Fargo. I actually own this stock in my longer term portfolio, and it's a pretty good company to own now with all this stuff going on with their investigators and loan writing and all that kind of stuff. It's been a little bit of a negative catalyst, so I actually jumped in I bought calls on this dip to the 200-day moving average in my IRA, so I bought some calls there, and I actually let those go the other day on the test of this high right here. So I went ahead and jumped out of those, and then just the way that shares were acting with some of these regulatory slash headline catalysts ahead, I thought like it was I felt like it would be a good short opportunity, so I bought the 60 strike puts, which are right in here, and I bought those, and I sold the 55s against them, pretty much betting that we go back down to test that low right there. So I think that from a short-term perspective, Wells Fargo is a good short, but from a longer-term perspective, I wouldn't be trying to short it forever or anything like that. So, like I say, you might get a dip back down to that 200-day. That's kind of how I'm positioned to profit from a dip to that 200-day moving average at about $55, $56. But I think resistance is pretty much right over top of us here at the 61.5, which is the 50-day moving average. And also would be a Fibonacci 50% retracement there. So stay short with Wells Fargo, and I will be back a little bit later on this afternoon to give y'all a few more updates. Take care.